Adobe versus Figma. Where do they stand today? In September 2022, Adobe shocked the creative world with one of the boldest bets in the software history. It announced plans to acquire Figma for $20 billion in cash and stock. The news sent shockwaves through Silicon Valley and Wall Street. For some, it was a natural fit, the king of creative tools joining hands with the new darling of collaborative design. For others, it looked like a naked land grab by a legacy giant trying to squash a fast rising rival. The reaction was immediate. Adobe's stock price collapsed, erasing more than $30 billion in market value as investors worried the price was too high. Regulators across the EU and UK stepped in, raising alarms that the deal would eliminate competition in design software. And by December 23, after more than a year of scrutiny, the deal collapsed. Adobe was forced to pay Figma a $1 billion breakup fee. Instead of merging, the two companies embarked on separate journeys, each fueled by a mix of urgency, ambition, and rivalry. And today, that rivalry defines the future of design. Adobe, the 40-year-old titan, and Figma, the upstart turned public company, are both racing to reshape the creative landscape. The question is, where do they stand now, and who is better positioned for the future? Chapter 1: The Fallout and Immediate Aftermath. The collapse of the merger was a turning point. For Adobe, it meant accepting that regulators saw Figma not as a niche collaboration app, but as a genuine threat to its dominance. For Figma, it meant independence and a chance to prove it could thrive on its own. During the 15-month merger limbo, Figma didn't slow down. In fact, it accelerated. Headcount grew from 800 to over 1,300 employees. Annual recurring revenue rose nearly 40% to more than $600 million, all while staying cash flow positive. And when the acquisition officially died in December 23, Figma emerged stronger, armed with momentum, and even $1 billion from Adobe's breakup fee sitting in the bank. Adobe, meanwhile, had to pivot. It had effectively paused development of Adobe XD, its own direct competitor to Figma, assuming it would soon own the rival. That left a gap in its product design portfolio. To fill it, Adobe doubled down on what it knows best, adding new features to Photoshop, Illustrator, and its wider Creative Cloud suite. Most importantly, it went all in on AI. The irony of the failed deal is that it sparked more competition than collaboration. Instead of combining forces, Adobe and Figma began encroaching on each other's turf. Figma moved closer to code and product development, and Adobe leaned into collaboration and web-based workflows. And users suddenly had front row seats to the battle of innovation. Chapter 2: Figma's Independent Path. Now, Figma's story after the breakup is nothing but short of remarkable. In July 25, it went public on the New York Stock Exchange under the ticker FIG. The IPO was priced at $33 per share, raising $1.2 billion and valuing the company around $19.3 billion. Now, within 3 weeks, investor enthusiasm doubled the stock, briefly giving Figma the market cap north of $30 billion. Underneath the hype, Figma had real business momentum. Revenue for 2024 hit $479 million, up nearly 50% year on year. By mid-2025, quarterly revenue was running at $250 million and the company even turned a profit. $28 million net income in Q2. In a world where many tech IPOs bleed cash, its business model remains one of the strongest in SaaS. The freemium approach, where anyone can start for free and upgrade later, has made Figma a household name amongst the designers. It now accounts more than 1,000 customers paying over $100,000 annually, with a net dollar retention of 132%. Meaning customers not only stick around, they spend more over time. Gross margins sit above 85%, showcasing its software efficiency. Now, the product innovation has been relentless. Figma introduced Dev Mode, helping developers hand off designs more easily. It built variables and design tokens, bringing design and implementation. It also launched advanced prototyping, making the tool more powerful for product teams especially. And most notably, it began weaving AI into FigJam, its collaborative whiteboard. Imagine typing a text prompt, generate a user flow for a food delivery app, and instantly seeing a structured diagram appear, or running a brainstorming session where sticky notes are automatically summarized into themes. Figma even acquired an AI startup called Diagram to accelerate this vision. The ambition is clear: to evolve into a single design tool into the operating system for product development. In short, Figma wants to take production all on one multiplayer canvas. Chapter 3: Adobe's AI pivot while Figma sprinted towards IPO glory. Now, Adobe was reinventing itself around the AI. In 2023, it launched Adobe Firefly, its family of generative AI models for text, images, and design. The responses were explosive. Over 70 million images were generated in the first month alone, and by 2025, the number has crossed 8 billion. Adobe wasted no time embedding Firefly into its flagship apps. Now, Photoshop gained generative fill, allowing users to expand or edit images with a single text prompt. Illustrator rolled out AI-assisted recoloring and vector creation. Adobe Express, its canvas-style app, added AI text-to-image features for quick content generation. The company positioned Firefly as commercially safe. Unlike many AI models that scrape the open internet, Firefly was trained on Adobe stock images, licensed content, reducing copyright risk. Now, this was a big selling point for enterprise clients worried about legal exposure from AI-generated content. And the strategy worked. By late 2024, more than 40% of Adobe's top 50 enterprise clients had doubled their spend compared to the previous year, citing AI features as a key reason. Now, Adobe's revenue for fiscal 2024 hit $21.5 billion with $5.56 billion in net income. Creative Cloud's ARR alone reached nearly $14 billion, more than 15 times the size of Figma's. But despite the numbers, Adobe isn't without challenges. Its market cap, once above $250 billion, has now fell down to $150 billion by September 25 amid investors' concern about slowing growth and rising competition. Analysts remain skeptical about how much Adobe can directly monetize AI in the long term. Still, Adobe's position as the creative software incumbent with tools spanning Photoshop, Premiere, Illustrator, Acrobat, and more gives it a moat that a few can match. Chapter 4. Head-to-head. Financials and market position. The financials contrast between Adobe and Figma is striking, a classic David versus Goliath story. Now, Adobe is the established giant, $21.5 billion in annual revenue, nearly $6 billion in profit, and a global footprint with over 30,000 employees. Adobe's stock trades at about 7 to 8 times their sales, reflecting its maturity and stability. Growth sits around at 20% annually, steady, if not spectacular. Figma, meanwhile, is the hypergrowth challenger with less than $1 billion in annual revenue. It's tiny in comparison, but it is growing at 40 to 50% year over year, profitable at scale, and trades of nearly 30 times towards sales. A valuation that takes in enormous expectations. Its headcount is under 2,000, but its cultural impact is outsized. Investors see Adobe the stable earning machine, while Figma, by contrast, is a risky rocket ship with high upside. And in many ways, both perceptions are true. Adobe dominates with breadth and reliability. Figma dazzles with speed and innovation. Chapter 5. Strategic and Cultural Divergence. Numbers only tell half the story. The real difference between Adobe and Figma lies in their DNA. Figma is the quintessential Silicon Valley upstart founded by a 20-year-old Dillian Field in 2012. Its mission has always been to eliminate the gap between imagination and reality. Its growth strategy is product-led. Win over designers at the grassroots, let them speed it inside companies and expand usage organically. Its community is vibrant, fueled by plugins, online buzz, and the packed config user confidence. Culturally, it's fast, experimental, and user-obsessed. On the other hand, Adobe is the seasoned incumbent. Founded in 1982, it has built a portfolio of tools that define the entire creative industries. Photoshop for imaging, Illustrators for vectors, Premiere for video, and its strategy leans on enterprise bundling and acquisitions, buying companies like Macromedia, Omniture, Magneto, and Frame.io to extend its reach. Regulators blocking the merger validated what many suspected, that Figma could grow into a direct challenger, not just a niche collaboration app. For Adobe, this was a wake-up call. And for Figma, it was the proof that they have disruptive potential. Chapter 6. The Road Ahead. Looking forward, both companies are set on ambitious paths. For Figma, the next phase is expansion beyond UI design. It's already testing products like Figma Sites for web design and Figma Slides for presentations. Imagine a world where you design your app screens, your marketing site, and your pitch deck all inside Figma with real-time collaboration backed in. Pair that with AI that can generate UI from text descriptions or auto-produce A/B test variations, and Figma starts looking less like a tool and more like a platform for product creation. Adobe's roadmap is equally aggressive. Firefly 2 is already in development with promises of text to 3D object generation, AI-driven video editing in Premiere, and even natural language commands in tools like Lightroom. Adobe is also likely to push harder into cloud collaboration, possibly reviving a Figma-like workflow in-house. Both companies are also eyeing new frontiers. In AR and VR, Adobe has a head start with tools like Substance 3D and Aero. In democratized no-code product building, Figma's DNA makes it perfectly suited. The overlap is inevitable and the competition will only intensify. And the conclusion is, where do Adobe and Figma stand today? Well, Adobe remains the heavyweight with scale, profits, and an unbeatable suite of creative tools. It has reinvented itself around AI and will continue to be the software backbone for professional creators. Figma is the scrappy independent with speed, culture, and community on its side. It has gone public, proven profitability, and sets its sights on expanding far beyond design. But perhaps the most important is it's not Adobe or Figma, it's Adobe and Figma. Modern creative teams often use both. The brainstorm in FigJam, design in Figma, polish assets in Photoshop, and generate marketing visuals in Adobe Express. The rivalry is pushing both companies to innovate faster, and the biggest winners are the users. As we head into 2026 and beyond, expect the battle to continue across AI, collaboration, and new creative frontiers. One is a titan, another is a tailblazer. Together, they're building and shaping the future of design. So, this is it, guys. This was Adobe versus Figma. Hope you liked the content and subscribe to the channel for more such breakdowns only on Appreciate.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.